Introducing Ausbiz Capital GrowWise, a new fund which combines institutional insight and experience with a target return of 15% per annum. Our fund mirrors SciTech GrowWise, backed by an 18-year track record with historical 21% average annual net return. With more than $1.45 billion under management, the SciTech GrowWise Fund is led by award-winning global portfolio manager Ivan Sherman. The same strategy is now available to Australian investors from as little as $5,000. Discover Ausbiz Capital GrowWise, investing informed by experience.
Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's get across what we have seen overnight. Global equity markets rising to new record highs for the second straight session, with bullish sentiment on Wall Street pushing all major indices higher as investors position for an interest rate cut from the US Federal Reserve. The S&P and the NASDAQ closing at records. The small cap Russell 2000 hitting a 6-month high. Now, among the Mag 7 stocks, Nvidia, Alphabet and Microsoft fell as investors searched for new growth drivers, whereas Apple rose on reports the company is working on expanding into AI-powered robots, home security and smart displays. CoreWeave, which is backed by Nvidia, fell heavily after the AI data center operator reported a larger than expected quarterly net loss. Paramount Skydance surged after winning exclusive broadcasting rights for the UFC for 7 years. And healthcare stocks led gains among the S&P sectors. Meanwhile, global equity funds excluding the US received their biggest inflows in more than 4.5 years in July as investors redirected capital away from the US on concerns over the economy, stretched stock valuations and a weakening dollar. $13.6 billion was directed into ex-US funds, while US-focused equity funds saw close to $6.5 billion in outflows. Well, the likelihood of a US rate cut in September is now seen as a near certainty following the moderate US inflation data, with traders pricing in a 99.9% chance of a 25 basis point cut. That's according to CME's FedWatch tool. This comes as US Treasury Secretary Scott Bessent advocates significant Fed easing, saying, "I think we could go into a series of rate cuts here, starting with a 50 basis point rate cut in September. If you look at any models, suggest that we should probably be 150, 175 basis points lower." And President Trump has indicated he's close to nominating a replacement for Fed Chair Jerome Powell, saying, "I think I'll name it a little bit early, the new chairman. I am down to 3 or 4 names." Meanwhile, President Trump has threatened severe consequences if Russian President Vladimir Putin does not agree to peace in Ukraine. That's ahead of their meeting on Friday, but he didn't reveal what those consequences would be. US Treasury yields have fallen on the prospect of interest rate cuts in September. The yield on the 2-year down to 3.68%, the 10-year at around 4.25%. The US dollar also slipped for a second straight session, the Aussie climbing to 65.5 US cents. And risk-on sentiment has seen Bitcoin flirt with record highs at $123,500. Oil prices have fallen to more than 2-month lows on bearish supply guidance from the US government and the International Energy Agency. Brent crude futures at $65 a barrel. Copper's off more than 0.5%. Iron ore falling close to 1% at $103 a tonne. And gold has been lifted by a weaker dollar and falling treasury yields. Spot gold around $3,355 an ounce. Right, let's get across what we are seeing with a focus on Wall Street. Ira Epstein joining us from Linn and Associates. Ira, welcome back. So let's start with interest rates. A lot of jawboning going on here, particularly from the Trump administration. We've heard too, obviously, from various Fed members. So, I mean, is it a certainty that rates will be cut next month?
Well, if it isn't, this is about as close as you can get to a certainty. Name me a Trump member of his administration that isn't just beating up on poor Fed Chair Powell. So what we've got to look for, of course, is the data. The Fed chair will be in Jackson Hole on August 22nd. That's when he's scheduled to speak. It's 9 days from now. It's a prelude to what will happen. I'm not looking for 50 basis points. I think that they'll go 25 if they go at all. I want to make that clear. A lot still depends on the data. And the Fed is doing a pushback. You know, we know that the Fed chair has now got dissent in the Fed members. Two of them came out openly in the last meeting. More could join. And at some point, he'll have to listen. So I think that, you know, the market is baked in the 25 basis points. The question is, could it be bigger? And for that to happen, we need weak labor to happen. So far, we haven't seen that. So tomorrow, you're going to get the jobless claim numbers. You got to look at those. That'll come out 7:30 a.m. Central Time, followed right behind that by the PPI. And they're looking for 0.2 of an increase in the headline number, 0.3 in the core PPI. I think if the Fed starts cutting, what they've also done, Andrew, is they've thrown in the towel that they're going to get inflation down to 2%. I think that that was a fallacy anyways. You and I have talked for a year on this, maybe longer, and I always thought 2.5%, 3% is a more reasonable target, and that's where I do think we're going to end up.
Ira, who's the market listening to then? Obviously, Jerome Powell maintaining his independence there has been resistant to any rate cuts to this point. As you mentioned there, Scott Besson, look, he's saying those rates should be 150, 175 basis points lower.
It's listening to neither. It's listening to the president. He's controlling this market. He's the head guy. And what do you think's going on? We were on last week and I said, watch out. What's now happening is people are looking at the stocks that have gone up and they're saying, they're too late on those. They're just going to start buying everything in the Russell and the other markets. And you look what's going on. Today, you saw massive rotation taking place coming out of names like Netflix and the like as they got back up to 1237, dumping them. And they're buying names you haven't even heard of as you're getting the little guy just saying, that stuff's gone by me. I'm not going to be left behind. At the same time, as you pointed out at the top of this show, there's money leaving the U.S. for other areas. Part of this has to do with the dollar. I put out tonight on my website a special dollar report, in fact, because we're at such an important area right now. If you get under in the dollar index 9,600, look out below. If you don't get under it, then the dollar might have bottomed already and start to come up. You're at a real crux in that market. Gold has gone quiet. Silver's gone quiet. It's the day of Ethereum. It's the day of the Bitcoin. It's other assets that have taken over.
Yeah, so you talk about that rotation, particularly out of the mega caps, and it's that MOMO, it's the FOMO. You mentioned crypto. Does that sound a little bit of a warning to you of what people are doing in terms of their investments?
Oh, I think that the cryptos are real. I think that you can go up from here to the 150 level in the Bitcoin. I don't see why not. Ethereum's getting a massive play. The head of Fundstrat, which is Tom Lee, he runs one of these companies, and they're trying to raise $20 billion to take over 5% of the Ethereum market. So when people get their hands on these, they don't resell them, a lot of them. They just disappear from the marketplace. And when that happens, it's just another asset that people are putting away. It's like gold bars. People that buy gold bars typically put them in the safe deposit vault. They don't walk around with them in their pocket. They don't keep them in their house typically. They put them in a safe place and you don't see them again. And that's pretty much the thinking that's going on in these cryptos. The other thing the president's successfully done is he has dropped the price of energy. You know, this is the time of year in America where gasoline prices often go up as you're in the last part of the summer. They're not. We're up like 2-3%. We're normally up double digits at this time. So that's put more money in people's pockets, and that gives them more money to spend. The problem is the tariffs are taking that money to a degree. You go out and you get a tomato, they come in America primarily from Mexico and Canada, and you get a 15% tariff for say on it. Grocery chains don't operate on a 15% margin. So those parts of the market are going up. So food costs you've got to keep an eye on. And as we go through inventories that were prepared for these tariffs and get through them, that's when the tariff inflation will start to show. It'll be gradual. It's happening right now. That's why tomorrow they're looking for core PPI, both positive numbers on the headline and the core.
So Ira, where do you want your money to be right now?
Good question. A lot of it's right now got to be parked in the markets that you own. So if you own like the Boeings, if you own the Netflixes, I still think they're great. Nothing wrong with the companies. In the futures market, you've got to be long in the stock indices on breaks. Please don't chase rallies into Bollinger Bands. You often get into trouble doing that. That's an algorithm designed to keep the market trading within it 95% of the time. Why are you bucking that? Go to the areas that don't have that. That's one of the things. I'm still bearish on the energies. I still see worse coming. I don't know what to expect out of the Putin talk. Putin has bamboozled our president over and over. He keeps buying more and more time, and he keeps taking more Ukrainian land. When does that end? And what do you do about it? And I hear he's going to fire some supersonic missile just before the meeting to show that he can deliver a nuclear warhead anywhere, anytime he desires. I don't think he's ready for peace.
Ira, on that ominous note, thanks for joining us, Ira, from Linn and Associates.
Thanks for having me.
All right, let's take a look at the local market as we get underway here. Look, we are looking for a positive start, up around 0.3%. Focus today, we've got jobs data coming to us for July. It's obviously a key measure as far as the RBA is concerned, part of its dual mandate. And of course, reporting season, a number of companies having already reported this morning. In fact, we'll get across what we're seeing there. Among those that are reporting are Telstra, Origin Energy, Suncorp, Temple & Webster, and the ASX. We're also Pro Medicus. We're going to catch up with them a little later today, so watch out for that. Stay with us for the open.